The stock market sounds like one thing. It is not. It is a bunch of different systems stacked on top of each other, and people keep calling the whole pile one name. That is why it feels confusing. The parts are simple. The package is messy. Meet Bob. Bob owns a coffee company. The shop is doing fine, but Bob wants to open more locations, so he sells a small piece of the company to the public. That piece is a stock. A stock is an ownership claim in a corporation. Sometimes it comes with voting rights, sometimes dividends. Mostly it is a slice of future profits, not the whole pie. If the company does well, that slice can become more valuable. If it does badly, less valuable, not complicated, just uncomfortable. That first sale is the primary market. It is where the company raises money. New shares, new cash. After that, the game changes. Investors start buying and selling those shares from each other. That is the secondary market. The company usually is not getting that money anymore. The shares are just changing hands. People say the stock market as if it is one room. It is not. It is more like a giant auction house wearing a spreadsheet. So why does the price move? Because buyers and sellers disagree about the future. If more people want the shares than want out, the price rises. If more people want out than want in, the price falls. No astrology, no secret code. Just a crowd repricing a future guess. On the screen, you will see the bid and the ask. The bid is the highest price a buyer will pay. The ask is the lowest price a seller will accept. The spread is the gap. Market makers stand in the middle and keep the whole thing moving when humans get indecisive, which is often. Here is the simple version. Bob wants to sell at $21. Alice only wants to pay $20. They do not agree. A market maker helps the trade happen somewhere in the middle. That is price discovery. Boring name, important job. The market is basically a machine for turning disagreement into a price. And when you click buy, you are usually not personally walking into the New York Stock Exchange like a guy in a movie yelling into 3 phones. Your order goes to your broker. The broker routes it somewhere. Maybe an exchange, maybe a market maker, maybe another trading system. To you, it looks instant. Behind the screen, it is a plumbing system. Orders move, prices update, ownership records change, clearing and settlement make sure the buyer gets the shares and the seller gets the money. That is the part nobody puts in the app commercial, because tap here and enter the financial plumbing system is apparently not great marketing. Now the boring part that matters. Public companies have rules. They have to tell the public what is going on through quarterly reports, annual reports, and other filings. That is the SEC part. The SEC exists to protect investors, keep markets fair and orderly, and make it possible for companies to raise capital without turning the whole system into a rumor contest. Private companies can stay private. Public companies live under more disclosure. That is the trade. Why do companies put up with this? Because stock is a way to raise money without taking on another loan for every expansion. Open a new factory, build a new product, enter a new market, pay down debt. That is the real use case. And for investors, the reason to buy is simple. You think the company will be worth more later. Or you want dividends. Or you want exposure through a fund. Or you just want a piece of the machine. Different reason. Same pipe. One more thing. Most people do not own the market the same way. Some people own shares directly. Some own them through a 401k. Some own them through mutual funds and retirement accounts, which means the market can be everywhere in your financial life and still not feel like it belongs to you. In 2022, 58% of U.S. families held stock directly or indirectly, but only 34% of families in the bottom half of the income distribution did. 95% of families in the top 10% did. That is why stock market headlines can sound huge and still feel far away. So here is the whole thing in one sentence. The stock market is where ownership in public companies gets turned into a tradable price. That is it. Not magic, not a casino, not a scoreboard, a market. And once you see it that way, every other stock video gets easier. Next time, we can break down how IPOs work, how index funds fit in, or why stock prices can rise even when life feels expensive. Drop a comment with the next piece you want translated into plain English.